We're coming to you live from the Singapore FinTech Festival, and joining me for this segment we have Priya Jundamal. She is the General Manager and Head of DTCC Data Repository. We're here to discuss key reforms and developments in the global capital markets. Priya, it is great to see you as always. Welcome back to Trade Talks.
And Jill, it's great to have you back in APAC and Singapore.
Yes, my favorite place to be, of course, Singapore. Let's talk about some of the developments since 2023. It has been a packed year, especially for DTCC.
I cannot say it hard enough. Let me tell you what we've been busy working with the industry and our clients here. I think one of the biggest changes, and as I spoke to you last year, has been the implementation of the global rules changes. I mean, global, all in a year. Yeah. So we've seen about 5 releases so far. And the last one actually has been the ASIC and MAS release, so closer back home. And part of these changes, to sum it up, has been the move towards better global data harmonization and standardization. But just focusing back on the MAS release that we've seen, from a size and scale, it's been huge. Actually, I would say the biggest so far since we've run the GTR, or our Global Trade Repository business here in APAC. And why has it been huge? Because it's the first time we are implementing margin collateral rules changes. It was also instrumental that both MAS, Singapore, and Australia partnered to roll out the changes on a single date. So so on that front, it's been huge. And also, they took this opportunity, instead of having industry make multiple staggered changes, they decided to go on a single date with a big bang. So it's been definitely a busy year. We actually have a booth here at the SFF, and I, before talking to you, I spent some time talking to our clients and the industry here. It's good to know that the transition and release has actually gone really, really well. So I would say, before I end this question is, it wouldn't have gone that smoothly if not for the strong engagement and partnership with our regulators globally, and as well as here in the MAS and Australia in particular. Also, just the collective wisdom and learning from the prior global rollouts that we've seen this year with North America as well as Europe, and also early preparation. So what we did as the trade repository here, ensured that we got the project documentation ahead of time. We ensured that we had our testing platforms available much ahead of time, at least the tools for testing at least 9 months ahead of time, so that if any of the reporting entities were late in the game in getting ready, we were there to support them through this journey. Also, the go live weekend 2 weeks back and the days after.
Yeah, I remember the level of preparation that we were discussing last year in 2023. What about the impact of technology on the trading reporting business?
I would say technology has been a great enabler for us. I think for us, we continuously invest in automation, also modernizing our platform to ensure that we can have delivery agility, we can have good customer experience, and also improve our overall product capability. And also, what has been really huge for us is the move to cloud technology. Think about the volume of transactions that our global trade repository processes on a daily basis. I would say to you, and I'm not trying to scare you, it's about 400 million transactions on a day alone.
Yeah.
So from a historical footprint, it's about 4-ish petabytes of data, and that is growing. So, without the adoption and the move to cloud or embracing cloud, that would have not been possible. And also just, talking about testing, which is key, testing not only for the reporting entities, but also for the regulators to ensure successful rules changes. So that move to cloud has been helpful to spin up environments in a cost-efficient manner when you need them for the different jurisdiction, and to bring them down when you don't need them again.
Yep.
So this has been instrumental and pivotal this year, and also there are some other jurisdictions that are going live next year, which will continue to evolve and iterate through our testing changes.
So speaking of regulatory here, when you think about the next 18 months as you're looking ahead, what are DTCC's most pressing regulatory priorities?
I would say, besides completing the trade reporting rules, reforms and changes that I touched on. From a global DTCC perspective, I would say the next 18 months, we are really full on and focused on the US regulatory mandate around treasury clearing. You would have heard this, and I will, let me give you a bit of just a cliff note background on what this is. Basically, last year, the SEC has adopted what you call a final rule, basically mandatory clearing for the cash and repo market, which will come into effect end of 2025 for the cash market, and then in June of 2026 for the repo. I mean, for DTCC, we are already offering through our FIC. FIC stands for our Government Securities Division of Fixed Income Clearing Corporation. So we already enabled it, ready for it. But what we will do is to make sure that we are ready for the industry. We will be, all ready for the implementation of these final rules. But also, we have gone a step forward to have a global, robust strategy around outreach, where we have put together a microsite, which I'm sorry to say is actually now a macro site called ustclearing.com, to ensure that we've got information about FIC, we've got information about what are the models available for the industry, the rules and regulations coming up, videos, terminology, access to our SMEs. And it's not only for the US market, but for everyone globally trying to understand what the changes mean for them.
Yeah. With the US successfully transitioned to T+1 settlement, what are some of the learnings for the industry as a result of that? It was quite flawless.
And thank you.
Yeah.
And we are proud about it. And I think part of it, I would say, I know I may sound like a broken record, but what has worked well in our trade reporting side has worked well for T+1 and vice versa. And what I say, what has worked well is industry collaboration, working with the regulatory community, the industry associations, bringing the community together. So, we played a instrumental role in getting all the stakeholders together, and that partnership, if we didn't have that, I think that wouldn't have been that successful as a release. So we're very proud of that, and we continue to educate for that. Secondly, testing, early testing, I can't say that enough,
testing and
has been a huge thing. Ensuring good joint education, client content and materials. And lastly, as I said about technology advancement, about post-trade automation. That has been key to ensure there's efficiencies as you think about early settlement. So what we see as part of our learnings right now, and our journey through this move to UST+1, I think we see a huge opportunity to educate other markets that may be considering a similar switch. So they may have complex ecosystems. It may not be one size fits all for everyone, but we see that instrumental for us to start to educate, to share what we have learned with the community here in Asia Pacific and the global regulators.
All right, appreciate the insight as always, Priya. Thanks for joining us on Trade Talks, and thanks for joining me from the Singapore FinTech Festival. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.